Good afternoon, everyone. Today, we're going to be talking about Japan's international trade and investment, discussing the country's trade patterns and interactions with other countries. To start, let's touch on some key aspects of Japan's overall infrastructure and economy. Firstly, Japan is made up of 4 primary islands and more than 6,800 others, making it an archipelago and is located in East Asia. The country is heavily urbanized, with over 91% of its 126 million people living in urban areas. This is well over the global average, which is approximately 55%. As of July 2021, Japan had an unemployment rate of only 2.8%. Japan has maintained a very low unemployment rate throughout the years, especially compared to other countries regarding the COVID-19 pandemic. With a GDP of $5.06 trillion, Japan ranks as having the 3rd largest worldwide economy, only behind the United States and China. The GDP per capita is also approximately $42,000, meaning Japan is a high-income country. The currency used in Japan is the yen. This currency is the 3rd most traded currency in the foreign exchange market, following the US dollar and the euro. Japan's overall economy is very strong. While it has slowed its growth since the period between the 1950s and 70s, GDP continues to climb, and Japan has bolstered its economy through trade and investment. Japan has a technologically advanced economy with industries based largely in vehicles and manufacturing parts. Japan's exports make up approximately 16% of its GDP, with its top 3 exports being cars, vehicle parts, and integrated circuits, with cars making up the largest portion of exports at 14.9%. As of 2019, Japan was the world's 4th leading exporter, exporting a total of $696 billion worth of goods to other countries. As of April 2021, these numbers have shifted slightly, but Japan's top export continues to be cars, now at 12.2% of total exports. While the bulk of Japan's exports are made up of products and materials, the domestic economy has been shifting to be more service-based in recent years, similar to the US economy. As a result of this, Japan also exports a number of services, with the biggest one being royalties and license fees at $46.9 billion. However, other business services are not far behind at $46.6 billion. Japan's total service exports are $205 billion. As the number 5 trade destination in the world, Japan imported a total of $654 billion worth of goods in 2019. This means that as of 2019, Japan maintained a positive balance of trade, exporting $42 billion more in goods than it had imported. The biggest import for Japan is crude petroleum, making up 9.78% of total imports to Japan. The other top imports are petroleum gas, coal briquettes, integrated circuits, and broadcasting equipment. Regarding service imports, the top import to Japan falls under other business services at $66.7 billion, with other top imports being transportation, royalties and license fees, computer and information services, and personal travel. Japan's total service imports amount to $195 billion in 2019, making the trade balance for service exports and imports at a positive $10 billion. The top imports in August 2021 differ a bit from those statistics reported in 2019, with telephones overtaking petroleum gas as the 2nd highest import, while crude petroleum was still the top import at 8.52%. Japan's biggest trading partners are the US and China. Both countries are in the top 2 spots for both the biggest importers of Japanese goods and the biggest exporters to Japan. The top export destination is currently shifting, with data from 2019 showing that more goods were exported to the US, while the latest data from August 2021 shows Japan exporting a higher quantity of goods to China. We have yet to see if this will be a permanent shift in the top destination for Japanese exports, or if COVID-19 caused a temporary shift in the distribution of Japanese goods. However, both data from 2019 and 2021 show China as the largest origin for Japan's imports, the country exporting a significantly higher value of goods to Japan than the US has in recent years. Other important trading partners for Japan include South Korea, Taiwan, Hong Kong, and Thailand. Regarding trade agreements, Japan is a member of the WTO, or World Trade Organization, and has been since the organization's inception in 1995. This has allowed Japan to play a prominent role in global trade, exporting and importing from many countries internationally. Japan has also signed 2 trade agreements with the US recently, with both going into effect on January 1st, 2020. Known as the US-Japan Trade Agreement and US-Japan Digital Trade Agreement, these agreements regard market access to agricultural and industrial goods, removed or lowered tariffs, and promoted fair trade digital licensing.
Trade between the United States and Japan began in the late 18th century thanks to Matthew Perry. The picture on the slide is showing Commodore Matthew Perry, who led the ships to Tokyo Bay in seeking to reestablish trade between Japan and the Western world after over 200 years. With constant attempts by the European to convert Japanese to Catholicism and engaging in unfair trade practices, Japan dismissed most foreigners and limited trade access to only Dutch and Chinese ships. Since then, Japan is currently the United States' fourth largest trading goods partner. In 2020, the two-way trade total was $183.6 billion, with the United States exporting a total of $64.1 billion worth of goods and importing a total of $119.5 billion worth of goods. The country's trade deficit for the year of 2020 was $55.4 billion. Exports from Japan to the U.S. that brought in the most value were vehicles other than railways, bringing in $40.99 billion in 2020. Exports from the U.S. to Japan that brought in the most value were mineral fuels, which brought in $7.1 billion in 2020. Since Japan has not been in trade for long with foreign countries, there aren't as many trade conflicts as other developed countries have had. One major trade conflict Japan did go through was the European and Japan trade conflict in the late 20th century. During the Great Depression, Japan had risen significantly and expanding their exports all over the world. The European community criticized the inflow of Japanese goods, leading to a conflict uprising and friction, along with conflict between the United States and Japan. Japan and the European community tensions alleviated and strengthened its bond back up in the 1990s when the World Trade Organization was established. A more recent trade conflict in Japan is the South Korea-Japan trade dispute. The conflict starts from years' worth of tension. After South Korea defeated Japan in the war, South Korea's president, Park Chung-hee, demanded millions of dollars in reparation for the war. Japan had supplied more than $800 million in financial help with the 1965 treaty and felt the issue was resolved. However, in 2018, South Korea ordered a Japanese firm to compensate Koreans from forced labor from before the war. With tensions rising and boycotts in South Korea against Japanese goods, in August 2019, Japan put in place an export restriction on major materials that South Korea's technology industry needed to succeed. Japanese officials said this restriction was put in place because Japanese materials were being illegally sent to North Korea, potentially for the use of making weapons. However, in December 2019, the two countries sat down and discussed export control. The picture shown in the slide is South Koreans boycotting against Japanese goods. Compared to other developed countries, the inflow of foreign direct investment to Japan is relatively low. The main investors to Japan are the United States, France, the Netherlands, Singapore, and the United Kingdom, representing 2/3 of the FDI inflows into Japan. These countries mainly invest in industries such as finance, electric machinery, as well as chemicals and pharmaceuticals. The United States, which is the top investor, makes up 27% of all FDI inflows, and finance, the top investment, makes up 41.6% of all inflows. FDI inflows would likely be significantly higher in Japan if not for the tight control of the Japanese government that has a hold over foreign businesses in their country. This is well shown by the Forex, or Foreign Exchange and Foreign Trade Act, which was recently revised by Japan. Previously, foreign businesses that wished to acquire 10% or more interest in a Japanese company would need to undergo an approval process. However, this number has been reduced to only 1% interest as of May of 2020, requiring approval for a much larger portion of FDI inflows. In 2018, Japan was the world's largest contributor to outward FDI, eventually hitting an annual contribution of $250 billion in 2019, making up 17% of the world's FDI. The large FDI outflow from Japan in 1985 was originally a result of the appreciation of the Japanese yen against the US dollar, which led Japanese businesses to invest overseas to reduce costs. Recent investments, however, have been made to cope with dwindling domestic market, an aging population, and low domestic interest rates. These outflows have mainly been in consumer businesses as a result of Japan's domestic market shrinking. Japanese countries must venture elsewhere to increase profits. The biggest destination of FDI outflow has been the US, which is, as of 2020, Japan has the largest position in the compared to any other at $637 billion invested. Japan and the United States are big contributors to each other's economies due to their FDI relationship. Throughout the years, the foreign direct investment between the two countries has only grown stronger, bringing in more money. In 2019, the United States foreign direct investment in Japan was $131.8 billion, increasing the stock by 16.4% more than 2018. The lead investments from the US to Japan in 2019 were finance and insurance, manufacturing, and wholesale trade, in that order. On the other hand, in 2019, Japan's foreign direct investment in the United States was $619.3 billion, increasing the US's stock by 25.4% from 2018. Japan's leading investments in the US were in the order of manufacturing, wholesale trade, and finance and insurance. If you have any questions, feel free to email us with the links provided above.
Thank you.
Dude, I fucked up on that FDI one, but like honestly,